The industrial bellwether up more than 10% this year and at all-time highs as investors say, what recession? Certainly in construction, we've got huge spending, supply chain improvement, China, all important things to consider from the report. Let's turn to Seema Modi now with the story on CAT. And Quint Tatro has our trades today. He's Jewel Financial's founder and president. Welcome to both of you. Seema, what are you watching?
Well, Caterpillar, Kelly, is one of the most economically sensitive stocks on Wall Street. And with the prospect of a recession diminishing, the stock has seen sentiment improve. Also, that upbeat report from GE lifting the broader industrial sector. When the company reports earnings tomorrow, though, the real focus will be on inventory levels. Has the company's more efficient supply chain management helped levels normalize? And if so, is that helping its profitability and margin growth going into the future, into the second half of this year? Big topic of discussion will be China. It's one of those names that does have high exposure with around 5 to 10% of its sales. And when the economic data out of China worsening, we'll really get a key read from CEO Jim Appleby on just what he is seeing on the ground in China as it relates to residential demand and construction demand as well. The stock nearing an all-time high, so expectations are up there going into tomorrow's report, Kel.
Yes, a great point. Quint, are the expectations too high? What would you do with the stock?
Yeah, Kelly, this is a tough one because we do like the stock. We own it in a dividend model, but the expectations are super high and it's set up really for a sell the news. So I'm going to put a sell on it into earnings. We're not selling any at this point, but we're certainly not buying it into earnings. But as Seema mentioned, I mean, inventory levels are going to be very important. That's what hindered the story last quarter. But also 75% of Caterpillar's business is non-residential and is going to be benefiting from both the infrastructure bill, the CHIPS Act, and the just tremendous amount of data storage building, warehouses, et cetera, that's transpiring here in the U.S. So we think the company's going to really have good things to say tomorrow, but I do think it's set up for a sell the news. Any pullback, whether it's specific to the stock or market related, though, I'd be a buyer of that pullback.
All right, 263 up 7% in a month and really only about 10% on the year. We'll turn, Seema, thank you, to Uber now. That stock has doubled since Jan 1. Still, it's expected to report a loss of about a penny. But as it continues to push towards profitability, Oppenheimer says that could tip the company to be included in the S&P 500, always a catalyst. Remember when Tesla was included? Let's turn to Dom Chu with the story on Uber, Dom.
All right, so Kelly, what we're looking for is the latest sign, perhaps, on what life in America looks like and will look like in a post-pandemic world. What I mean by that is a lot of things have changed in the wake of the pandemic. A lot of paradigms have shifted for things like office work, dining out versus delivery, other types of things. Uber and its competition had to evolve in a lot of different ways. The growth, though, has shifted from the Uber Eats and food delivery side during the pandemic to growth in mobility and ride sharing because people are traveling more for pleasure. And as things ramp up for travel and commuting as the summer winds down and more stringent return to office policies start taking hold this fall, this winter, any kind of commentary from Uber with regard to ridership trends will be interesting to see. And of course, any updates on legal matters tied to that more overarching question about whether drivers in whatever jurisdiction they're in are actually contractors or full-time employees. That's still playing out in key parts of this country as well. So there's a lot to watch for that are outside just those numbers, Kel.
Sure, although the profitability issue, Quint, does make the stock look pretty expensive. You know, 164p, whatever you want to call it. I mean, this question about earnings and profitability really looms large.
Yeah, I mean, it looks expensive based on the numbers they have right now, Kelly. But if all of a sudden you look forward and this company is expected to turn a dollar in earnings in the next year, assuming they can get there, all of a sudden we're not so expensive in relation to how fast they're growing.